Adobe has been defining how we make things look good on screens since the early 1980s. They practically invented the digital design industry, building the foundational tools creative professionals relied on long before the internet even existed. For decades, you bought their software once, and you owned it. But in 2013, they pivoted. They moved all their applications behind a recurring monthly paywall called Creative Cloud. This chart tracks Adobe's total revenue over the last decade. And while independent creatives were furious about the perpetual subscription, the revenue line climbs straight up, scaling from $4 billion to over $21 billion. Looking at the expanded data here, their profit margins have consistently stayed above 25%. They are pulling in record revenues, record profits, and holding vast amounts of free cash flow. They successfully built a bulletproof monopoly. By making their tools the industry standard, they effectively forced every creative professional to pay a perpetual tax just to do their jobs. But look at the split screen. On the left, you have Adobe's actual business performance, profits steadily rising. On the right, Adobe's stock price plummets aggressively after peaking in late 2021. Moving into 2025 and 2026, the stock flatlines and dips. Adobe reports record earnings every quarter, yet investors drive the valuation further down. Meanwhile, the rest of the tech sector has experienced a massive boom. Companies selling hardware and enterprise software have seen their valuations skyrocket, leaving Adobe completely behind. Wall Street doesn't value a company based on the money it made yesterday. They trade on the story of tomorrow. And the current consensus is that artificial intelligence is arriving to dismantle Adobe's empire. To test if that fear is valid, you have to split Adobe's massive audience into two distinct groups: the high-end enterprise professionals running major production studios and the casual, everyday users. The enterprise clients aren't going anywhere, but that second group, the marketing interns, the college students, the small business owners, they are actively looking for the exit. The pricing structure is simply too heavy. When a freelance photographer in India is expected to pay 54,000 rupees a year just to keep their access to Photoshop, they immediately start searching for alternatives. Those alternatives are now incredibly fast. Instead of spending months learning complex masking layers, users can type a short prompt and watch a fully formatted professional graphic assemble itself in 10 seconds. Competitors like Canva and CapCut are stripping away the complex workflows. They offer heavily automated, AI-assisted design and video environments that are dramatically cheaper and often entirely free. Adobe faces a slow, quiet erosion of the bottom half of their addressable market, a gradual loss of the very user base that helped build their initial dominance. Adobe felt this pressure mounting in the collaborative design space and panicked. In 2022, they tried to buy their way out of a competitive deficit by offering an absurd $20 billion to acquire a startup called Figma. The deal never went through. International regulators heavily scrutinized the buyout, ultimately blocking the acquisition entirely and forcing Adobe to pay Figma a staggering $1 billion breakup fee. Setting $1 billion on fire because you failed to clear regulatory hurdles is a massive blow to corporate credibility. It verified investor fears that Adobe was vulnerable and acting defensively. The strangest part of all this is that Adobe's own AI technology is actually excellent. They built Firefly, a generative AI model trained specifically on safe, licensed content, and they integrated it directly into their existing apps. Their struggle is more about public relations than actual code. They have successfully built capable AI tools, but those innovations are currently overshadowed by high prices and an awkward string of strategic failures. Let's bring this back to reality. Adobe's foundation is incredibly solid. Their enterprise contracts with major media organizations, alongside their deeply lucrative PDF and document signing business, generate billions in reliable cash. Huge corporations do not migrate their IT infrastructure easily. The sheer cost of retraining thousands of employees and abandoning established file formats ensures these enterprise clients stay locked in. From a pure survival standpoint, Adobe is perfectly safe. They have the cash, the products, and the institutional grip to keep operating indefinitely. But the market's anxiety is pointing to a real problem. Over the next 10 years, as automated tools handle more complex tasks, the total volume of humans who actually require deep, premium professional software will naturally shrink. To capture the creatives of tomorrow, Adobe has to stop relying exclusively on high-priced subscriptions. They need smarter, cheaper bundles, and they must build free tiers that actively compete with Canvas accessibility. They also need to fix their marketing. They have the distribution to be the ultimate, legally safe AI platform for working professionals, but they have to aggressively claim that narrative before someone else does. Adobe will survive the AI revolution, but their depressed stock price is Wall Street loudly confirming that the comfortable era of unquestioned monopoly-style pricing has finally ended.